The coronavirus outbreak is hitting chip stocks. The sector's benchmark index down about 10% in a week. But that performance follows a strong rally over the past year. Joining us now, Stephen Milunovich, technology strategist at Wolfe Research. Supply chain fears, obviously, from China, it directly affects a lot of chips. But chips are always kind of a leading edge of technology, and they move before one way or another and can sometimes presage moves in the overall tech industry. Why is that? They're the guts of what is really happening in tech, I guess, right?
Yeah, and it's funny, Joe, because last year the stocks took off as people were anticipating a pickup that never really came. So the stocks moved particularly early last year. Chip stocks actually are very economically sensitive. They move with things like industrial metals prices and so forth. We've been underweight chips and kind of expecting them to pull back after that big move, and now we've finally seen it. When you look at since, say, mid-January when the virus hit the news, semis and hardware stocks are the ones that are down most in technology, which makes sense because they have both the demand hit and the supply chain problem.
So, like so many sectors of the market and the market itself, they may have been ripe for a pullback anyway. This is a real reason, not just an excuse for a pullback, though, don't you think? I
think that's right. I mean, tech obviously has been huge, but it's been fairly narrow. It's been the big tech names like Microsoft, Apple, the chip stocks. So I think it's ripe for a pullback. Now, we continue to believe there still could be some downside. I heard you talking earlier about the market being oversold. Tech is not as oversold as the market. And our technicians point out that until the generals fall, meaning Microsoft, Apple, et cetera, you probably haven't hit a bottom. And those big tech stocks are down less than 10% so far. So there's probably a bit more to go.
All right. But what would be the indication to you that the lows are in? And then you could actually extrapolate maybe to the overall market as well, I guess, is your point, right?
Yeah, so obviously you want to see the virus play out. I mean, I've been concerned that the stocks weren't getting hit at all, and it seemed like this is going to be a little more serious than people thought. So we need to see that play out. Now, you've got a number of companies like Jabil yesterday, said they're going to miss earnings. They're an EMS contract manufacturer. They said they're at 60, 70% of capacity in terms of their plants up and running. So you want to see these plant utilization numbers get higher. I'm a little concerned that China's sending people back to work when maybe they don't have containment yet. So, could this create an acceleration of spread? But you obviously want to see the supply chain stabilize, and then the demand will be there.
All right, you gave me the numbers on what the depth could be. What do you think the duration of this whole process is going to be?
Well, a lot of companies who've already announced earnings were thinking 2 to 4 weeks. More recently, I get the sense they're thinking it's 4 to 6 to maybe 8 weeks. I mean, I'm no expert, I don't know, but it seems like it could go on longer. The F1 race in Shanghai, even April was canceled. The Olympics now are at risk. So I would say it could easily take us into, early to mid-summer. And hopefully from there, things get a lot better.